Okay, we're back. The price has broken out of the opening range. So at this point, I will be looking to add to the trade somewhere around this level. And I will be securing my original position to break even. I'm not very optimistic about it, to be honest. I think that this might, again, if it was a synchronic move, 120 pips correction would end somewhere around here. We have just barely broken above the highs here. But I will be staying true to my strategy, so I'll be adding a 60-point stop loss with the original position secured at break even. And we'll be looking to take the first profit here around 23, let's say 680. And successively being adding to the position, of course, assuming it goes up. The oil has slightly retracted, and that has given a big spur to DAX to go up. So it seems to me like the sentiment is positive in the market. Because this move in here from 9 till, let's call it 1020, was 2 pips in oil. And from 9 till 1020, it has caused, let's say, a 40 pip drop altogether with the initial move up. And then just this retracement here, 1 pip, is caused this massive rally here, 100 pip. So that tells me that people are in a risk on mode, unless of course it's just a range above the view up. Still above the view up though. So yeah. Let's wait for the second position to be filled. Normally this would be more loss because of the oil trade and the add-ons that were unscheduled. So I'm in quite a high drawdown today, already in the beginning. But nothing we cannot recover on. The take profit of this second trade would then be significantly higher, somewhere around 150 points. But it's just line in the sand. I wouldn't really be concerned if we actually are bullish if we just go above here. That could be a move as well on the day. We'll just manage it with stop loss rather than the take profit. This is the, I would say somewhere here would be the initial target. We're about to enter a second buy. Manually entered. Price is similar, not the best one, but I would like to enter this position here and see where we go. Now the add-ons here, normally if this were a trending day, I would indeed like to keep them spaced not very far apart. This is 36 pips. Indeed this would be somewhere around 20. But I need a pullback. So after it goes beyond 20 pips from this position, I'll be looking to add somewhere in here. but definitely above the top here, right? So let's call it 30 pips, somewhere around here would be my next alert. And then if it reaches that, I will be looking for a trace back. But of course, might just reverse right now, and the problem will be gone. 60 points somewhere around here. Let's see what happens. It's sliding downwards. We have now closed the gap. That could potentially be a sign for reversal as well. But I need to stick to my rules. You can interpret the price action in 1,000 ways, and I can make up arguments for both up and down. But it's important that we are able to monetize on these big moves here that happen from time to time. I have actually caught this here, this breakdown. And what I noticed is that the rallies happen in the times that I least expect them to happen, which then, of course, leave me out of the market or trying to even go against it, looking for reversals. So the rules are there to follow them. We look for a market which is going one direction. If it does, we'll be looking to enter additional trades with the previous positions, of course, secured. And I have made a mistake on my alert. Of course, I will be willing to add to the position somewhere here. Then it means the price has to go somewhere around here and then reverse. And I will be adding, looking for a continuation. And this position will, of course, have to be secured by a break-even stop loss. Now, that of course means that a lot of the time, and when we enter here, if the price reaches our original here target and goes back, it just goes back more and takes out the second add-on. That could happen as well, and then it might just go back up. It's a shame, but it happens, and we have to live with it. The hope here is that it doesn't have a too big of a retracement and it goes continuing up, which it does happen, of course. And when it does, you can see these moves here. Of course, this was a night, but yesterday wasn't a very good day for that. I actually made my ranging strategy yesterday, and I was looking to go into the trade more or less at around 100 pips away from the VWAP. And this is also the opportunity that gives you later on in the day. You have these highs and lows in the ranging market, so you know more or less when to go in. And there's a big chance that you're going to get like this here express, which is great. Same here. You can see the market was in a chop for a moment, then it went up and was steadily going up. Now, of course, these wild here retracements would probably stop us out, but and going here. Yeah, it would be difficult to manage, to be honest. You'd probably get taken out. These are normal days. This would be more something like a normal day where you go down. Of course, this here would be an opening trade towards the upwards, and if we respect the 50 pips, take profit, we could get out of it, but we wouldn't. In this case, this would be a tough day. But on the third one, yeah, probably will get taken out. The swings are massive. There's something. The corrections. Quite terrible. This is a typical trending day. You can see the corrections here are quite big as well. Of course, as time goes on and the price moves up, so you're here, enter the trade. This goes back to the opening range, you see, and goes back up. If I would have added on this one, I hope I would, but not sure. Then here, you go up, and then you add in here, of course. And you get taken out for both. But you have still gained your 200 points on the original one. Let's see where we go. It looks like a bull flag. This should go further up. Oil is slumping. Now, if oil now reverses off of this moving average, 200 simple moving average, then it's a strong signal to go up. If it goes down, however, I will bet that it is going to close the gap, which would give us some good wins to take the DAX higher. Seventeen pips. The VWAP is not reacting very much to the price increase, and the volume is dropping. I don't expect this to go very strongly into one direction today. Of course, if we get stopped out here, that counts as a third strike. So we will no longer be attempting to re-enter after that. That is here our final volume. If it goes below, goes down. We will be able to then revisit the trading somewhere around afternoon when we'll see what the situation is, if the market goes up or it goes down, if it has made any significant highs and lows. If it now reverses, which is likely, in my opinion, and goes down, I would expect it, barring, of course, any unforeseen events, Yeah, I would expect it to go down at least to this level here, 23,400s. But then, to be honest, I would be hesitant to enter the trade on the off chance it might actually just waterfall down. We'll have to then see. We will be looking for a once it gets here, we'll be looking for some sort of a distribution action. I will then risk to enter a buy trade and take it all the way back to the tops here. That will give us some good 200 pips profit and could make up for the loss of the day. But of course, it might not work out. That would be the last entry on the DAX. And we would then switch over to the NASDAQ for the opening, which is now earlier in CET terms because of the time change in US. So we now open the markets at 14:30. Normally it's 3:30, 15:30. Now it's 1 hour earlier. We will follow up, of course, in a week or two, in a couple of weeks. We will then go back to the usual opening times. Mm, Bloomberg is commenting on the release of the millions of barrels of oil from the reserves by the International Energy Agency. Yep, they're looking to appease the oil market. Oh, this is not good. This is not good. This is gonna cost us a trade. That level holds here, and they bounce off that simple moving average. I'm afraid we're toast. Actually, everything is telling me that it is going to be like that. We have a gap close. So all the positions, all the stop losses here, which would be centered around the gap, are now closed. You have an oil which has retraced and might go back up. If it, however, crosses the simple moving average here, strictly from technical perspective, I would expect it to close the gap. And that would open us up to some gains again. So far, nothing seems to be happening in the news. Let's see. Oh, it's slow. All right. I think I'm gonna get some breakfast and come back to see either the stop loss hit, in which case I won't have anything to do either way, or to take profit, in which case we'll be looking to add the trade and continue upwards. Just for the record, I feel that if I were to bet now that this will reverse, go back down. That is my gut feeling. But I'm stuck in a trade, so I'll stick to it. I'll see you guys later.